My name's Patrick Barron. I'm the founder of Blockchain Consulting Group based in San Francisco, and I'm here to talk to you about a $1 trillion transition that is going to take place. We are just at the beginning of it. But first, let me give you a little bit of background. I have helped several dozen ICOs in certain capacity with the process, helped build a decentralized exchange called orderbook.io that the intention is to facilitate compliant security token sales and transfers. The purpose of me being up here is to paint a picture of where we're going, to educate, to inspire, and to hopefully open your eyes of some of the opportunities and some of the hurdles that have to be overcome in order to meet this future. At the Blockchain Consulting Group, we help startups through the ICO process, help companies that are existing companies, if they're looking into blockchain technology, what they should not be doing. Also, education is a very important piece, talking with executives, talking with teams, talking about what it is, what it isn't, and really what you need to know. So, with that being said, I'm not a lawyer and I'm not a financial advisor. Those people are terrific, and if you are going to venture into this space, then you need one of those people to tell you what you can and cannot do, because when the lightning strikes and the thunder rolls, you don't want it coming down on you. Great. So what is a security? According to Investopedia, a security is a fungible, negotiable financial instrument that holds some type of monetary value. Pretty straightforward. The securities that we are most familiar with include equities, so common and preferred stock. It used to be that they were predominantly issued in paper form and the paper had to change hands, or you had a central repository where the ownership of that paper was just transferred from place to place. Equities typically also come with some sort of voting rights, some sort of participation that you can have in the company. Now, as we move into the blockchain future and as we start to tokenize equities, which can be done under the state of Delaware, now recognized as blockchain-based shares. I believe that Wyoming also incorporated that into the most recent bill that they passed. I know that California has some legislation pending that will also allow this. There is a lot of movement currently at the state level to recognize and facilitate blockchain-based shares. This is really important because it enables a much more efficient ecosystem. It enables things like voting and having an immutable ledger of how the vote was cast, proxy voting, for example. You can poll your constituents, if you will, your equity holders, and ask them questions about the future of the company. It really facilitates a much more involved ownership base of the companies and of the equities that we have. So equities, of course, are the first type that we're very familiar with: debt securities, bonds, debentures, banknotes. And debt securities also have the potential to have orders of magnitude more efficient gains as a result of blockchains, of cryptocurrencies. Things like payments. Currently you have transfer agents. You have folks that are collecting the money, determining who owns a bond, and then sending out wire transfers, a very laborious process. This can be automated in a smart contract and can be executed in the time that it takes to mine a single block. If you hold the token, then and there is a deposit of crypto into the smart contract, it automatically gets distributed based on the cadence of whatever that bond or that debt instrument is scheduled to do. These types of things, again, they're orders of magnitude more efficient and will eliminate quite a bit of the back office functionality that currently the financial industry depends on. If that is your role or if that is your organization, then you need to get ahead of this because the technology is not going to slow down for you. And the last type of securities that we typically think of are derivatives. Options, futures, forwards, swaps. These can be very helpful tools if you are, say, a farmer, for example, and you need to hedge your risk of what the price of your commodity is going to be at the time of harvest. That is an incredibly useful tool to have as an entrepreneur, as a business owner. These, of course, can be turned into weapons of mass destruction, as we saw in 2008. Warren Buffett called that one perfectly. Part of the problem that led to that catastrophe that we went through was not being able to untangle the web, not being able to determine who owned what and what the value of what was being held truly was. Now we have a system that can, again, trace that back immutably, instantly, and without question. It does have the potential to provide a tremendous amount of transparency to the marketplace, a tremendous amount of visibility into what was once opaque marketplace. These are very good things if you are, say, a regulator, if you are somebody who is holding one of these instruments. So traditional securities, pretty straightforward stuff. Now, when we look at tokens, what is a token? You know, there's a lot of jargon in the crypto community. We call things coins, we call things tokens, we argue about the nuances. I took a couple of definitions from Google that I think most accurately represent what it is that we're referring to here. So a thing serving as a visible or tangible representation of fact, or a voucher that can be exchanged for goods or services. So these are, let's just keep moving forward. So the types of tokens that we're most familiar with are, first off, utility tokens. This is what many ICOs strive to be, right? You heard the panel earlier. Somebody asked about their investors, and the panelists said, we don't have investors, we had participants, we had contributors. That is because what they're selling is not a security, it is a utility or a commodity of sorts. And utility tokens can be thought of as Ether, for example. That is very arguably a utility token. SEC has said that they do not believe that that would classify as a security, as well as Bitcoin. So something that facilitates work on a platform, something that gives you access. These are what we consider to be utility tokens. You also have what I would consider to be currencies. So Tether is a great example of that. What is going to be a stable token, if you will. We've seen different approaches for these, and I think that these are incredibly important. I'm going to circle back to those in a couple of slides. So types of tokens, utility tokens, currency tokens, and then we have security tokens. And so what exactly is a security token? Well, if you ask some people, it is the gateway to heaven. It is what is going to take us up to the pearly gates. There's not a great definition out there. I looked for one, so I made one up. I basically combined the two definitions that we had earlier. And a security token is a cryptographic thing serving as a visible and mathematically provable representation of ownership to a fungible, negotiable financial instrument that holds some type of monetary value. And so essentially what we're doing is that we're creating a cryptographic ledger that has all of the beautiful benefits of blockchain technology, of cryptocurrencies. And then we combine that with these traditional financial instruments that we are very familiar with, that we went through earlier. And so the question is, why is this such an explosive idea? So what, right? I mean, we've got securities. They've taken us this far, right? We've got a huge financial industry. So what? Well, there's some important differences here. First of all, these are programmable assets. What that means is, as I said before, you can program the business logic directly into the asset itself. They are not separated. The movement, where it can and cannot go, when the payment should be made, all of these things are programmed directly into the asset itself. Again, from an efficiency standpoint, this is going to eliminate a tremendous amount of back office work. If you are a regulator, this is a fantastic thing for you, because now you can verify that a contract or a security is doing what it's supposed to just by looking at the source code. You can just reference the contract and see, okay, do they have the proper parameters programmed in here, yes or no? It is very useful from a compliance standpoint. Also, this is a global ledger. The blockchain exists as a layer on top of the internet. And if you have access to a smartphone, I loved the idea that was thrown out earlier of giving away Android devices in exchange for sharing data. Increasing smartphone penetration, I think, is a really, really useful thing. I was looking up statistics yesterday, specifically for Venezuela. If anybody saw the news yesterday, Venezuela devalued their currency 95%. They chopped off 5 digits from their bills. We're going to devalue the currency and all of a sudden chop off 5 digits from the value of the currency. They're experiencing hyperinflation that is expected to reach 1,000,000% this year. That is just unbelievable. That is, not only is it unbelievably irresponsible to get to that point, that's a side note, it is incredibly fertile ground for technologies like this. When you combine something like a stable coin, I believe the Stably folks will be talking a little bit later, that's another stable coin project. When you combine something like a stable cryptocurrency with a global ledger where you can track and trade securities, then you open up a whole new world of possibility, right? Now what we have the opportunity for is for global capital movement to places where it has never been able to reach before. If you are an entrepreneur, a merchant in Venezuela, you now have the opportunity to fund your business without having to go through the traditional means. Again, if you have access to the internet and if the ecosystem develops. But places like that, places like Argentina, which are also experiencing uncontrollable inflation, these are like tinder boxes of kindling with gasoline poured on them. If somebody goes down there with a cryptocurrency match, it is really going to take off. I believe that it will take off in places of the world that have those types of economic conditions, as opposed to places in the world that have relatively stable, good forms of government, like what we enjoy here in the United States. But this really is something that has never been possible before. We've never had an open system where anybody can participate. Anybody can write data, anybody can read the data. If I am an entrepreneur in sub-Saharan Africa and I have a great idea, I can post my white paper online. And if you're an investor in Seattle or in Shenzhen province and you want to back that idea, you have the technical possibility to do that. Now, whether or not you have the legal right to do that, that's a different question. Here in the United States, we have laws around KYC, AML. Who's familiar with what these are? KYC, AML. Yeah, okay, all right, good, educated crowd. So I would argue that those laws have had a huge negative externality in that they have sidelined and pushed out billions of people outside the existing financial ecosystem simply because they don't have access to a government-issued ID, simply because they are too expensive to bank. These people now we have the potential to reach and bring them into this financial ecosystem that we all enjoy. It's also immutable. Again, that does away with things like corruption. It makes corruption much more difficult, changing things to favor your friends, your party. Again, untangling the web if you have to go back, if we're in a collapsed situation, being able to see who owns what. It's also neutral. This technology does not care what your intention is. It's the same as like Google Maps. Google Maps does not care whether or not you're Googling a destination to go deliver Meals on Wheels or whether you're looking for a bank to go rob. The technology is fundamentally neutral. You can use it and it will reflect our values as society. And ultimately, it's a platform of trust. So, in the original, in the Keynote version, that burned up. It was much cooler. Anyways, total addressable market. Let's look at this for a second. This is stocks only, upwards of $90 trillion. We will see orders of magnitude increase in speed of settlement down to seconds. We will see orders of magnitude decrease in fees and costs. AirSwap mentioned earlier that they will be releasing a security token functionality. They don't take any fees. Put those two together for a second, right? Orders of magnitude decrease in cost, orders of magnitude increase in speed. It is inevitable that this will take place. These are some of the companies involved in this ecosystem. It's an incomplete There's more out there than this. Disclosure, I helped create Order Book. I'm an equity owner in that. But you have companies like Harbor, Polymath, Order Book, Securitize that are building the protocols so that you can just have these plug-and-play templates, these contracts that you pull, and then you can do, say, a private placement. And the contract will know what it can and cannot do. Or it's a real estate fund, for example, a REIT, for example. All of the rules can be programmed into the assets themselves. These are companies that are helping to create these rules. We also have the token platforms, the trading platforms like T0, Templum, Open Finance that are facilitating the exchange. And then on the right-hand side, we've got some examples of the early security tokens. 22X, a batch of 500 startups, Blockchain Capital, the first one to do this, who really paved the road, Science Blockchain. This slide next year will be much, much more crowded. So, that being said, this is my contact information. Please feel free to get in touch if you have any questions. Happy to talk with any of you. Thank you.